Now, a cool thing about McDonald's is that they are a dividend paying company. McDonald's has been paying a increasing dividend since 1977. And looking at the dividend side of things, one thing that I always look at is the dividend per share history. So is this company able to grow its dividend year over year? And McDonald's has been able to do it, and I like to see a dividend growth rate of at least 4%. With inflation being around 3.5% to 4%, I like to see companies grow their dividend with a minimum of 4%. Now, when we're looking at this particular chart, the green line is the earnings per share, which is also the net income divided by the shares outstanding. That's how you get to the earnings per share. So net income and earnings per share, pretty much the same thing. A company that's able to grow its net income or its earnings per share is also able to grow its dividend, which is the blue line. That's why I'm highly likely to invest in companies that are able to grow its net income, because it filters down to the dividend payment that I get. They're also able to grow their dividend income. Looking at the yearly trends, so in the past year, they've been able to grow their dividend by 9.4%, which is great. Looking at a 5-year period, it's at 7.4%, and 10 years it's at 8%, which is great. It's a lot higher than the 4% minimum that I use based on the inflation rate. So the next thing that I look at is the payout ratio. The payout ratio tells me how much net income is being paid out as a dividend. So to calculate the payout ratio, all you do is take the dividend divided by the net income. What I'm looking for is consistency, and they have been pretty consistent with keeping the payout ratio at about 15%, but then you see an upward trend, which is quite concerning. Even though, yes, they've been able to keep it below 75%, but yeah, I would like to see it go back to 20%, which might not happen anytime soon, but I would keep an eye on it. So this is not a reason for me, for example, not to invest in a company, but this is something that I would pay attention to. And of course, McDonald's dividend yield, looking at the forward dividend yield, is fairly low at 2.3%, but at least their dividend growth rate is pretty high at about 8% looking at the 10-year time frame. So the dividend yield tells you how much in dividend income you're getting for the price that you're paying for a stock. So just take the yearly dividend divided by the price of the stock at the moment that you're buying the stock. I like to see this be above 3%, but here's the funny thing. There are companies that have a low yield and a high dividend growth rate, and then there are other companies that have a high dividend yield but a low growth rate. Now, there are some exceptions. There are some companies that have a high dividend yield and a high growth rate, like AppFi. But most companies, you're either gonna get one or the other.